The trade war between the world's two largest economies has reached whole new heights. The United States had raised tariffs on Chinese imports to 145%, intensifying pressure on Beijing. And in response, China has announced retaliatory tariffs of up to 125% on American goods. China also said it would ignore further tariff hikes, citing no economic sense for importers. The move follows U.S. President Donald Trump's decision to freeze some tariffs for 90 days while increasing duties on China. He had also expressed confidence that this hike would bring China to the negotiation table. Instead, it's an all-out tariff showdown. Trump says the goal is to rebuild American industry and reduce reliance on foreign supply chains. Critics, however, argue the tariffs are disrupting global trade and driving up consumer costs. The escalation triggered sharp market reactions. Wall Street tumbled, with Asian markets following suit. Tokyo fell more than 4% after a 9% rally the previous day. Indian stocks defied the market slump as investors priced in domestic advantages as global trade heats up. Safe haven assets surged, with gold hitting an all-time high above $3,200 per ounce. Oil prices dropped and the US dollar weakened as investors responded to fears of a global economic slowdown. Analysts saying the brief market tally after Trump's initial tariff pause has faded, replaced by concerns over long-term instability in global supply chains and investment uncertainty. And on the diplomatic front, Chinese President Xi Jinping has called on the European Union to join forces with China against what he calls unilateral bullying by the United States. The EU has temporarily suspended planned tariffs on $22.4 billion worth of US goods, but warns it remains ready to respond if the talks break down. The US shares the second largest trade deficit with the EU at over $235 billion. France and Canada have also voiced concern, with French President Emmanuel Macron urging the EU to prepare countermeasures. Meanwhile, countries like Vietnam, Pakistan, Canada are entering new rounds of trade talks with America. And for more on these developments, we earlier spoke to Dr. Andrew Ferris, CEO of Ecognosis Advisory Limited from London. Listen in.
So effectively what the Chinese are doing, and they're doing it correctly, and I'm sorry, this should be an example also for India. They will not stand for being humiliated by this stupid way of using tariffs. They said enough is enough. And actually, they even dismissed the whole thing. He says, if Trump continues to raise tariffs, we're going to ignore it completely. You know, the worst thing you can do to a bully is to ignore him. And I would beg that Prime Minister Modi, I'm not anyone to give advice to the freely elected and popular Prime Minister in the second, correction, in the first biggest country in the world in terms of population. What to do is, but please, no more begging to United States about doing something about the 26% tariffs on India. Forget about this.
To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.